Good evening, fellow traders and investors. This is Joe Gruender from investorshelp.net, both at our website and we're on Facebook with the same name. It's Saturday evening, the 7th of July here in Northern California, and we're having sort of a heat wave. I guess most of the U.S. of A. also experience a heat wave. So stay cool, sit back and enjoy. What I'm going to do is put together 3 videos just for you. As many of you know, yesterday I sent out an announcement, a post on my page at investorshelp.net on Facebook. And I was faced with a unique problem, a good problem to have, but a decision, let's call it that. I had a decision to make and I wasn't sure of what to do. So I put out a post alerting our subscribers and friends, asking, what would you do in this situation? What would you do if you had a 55% profit in one day and you are not a day trader? Do you take the profits, take that 55%, or do you let it ride? And of course it was on Friday. In particular, it was on Friday morning. I think it was a little before 9 o'clock here in California. I had to leave for an appointment shortly, so I did not have a whole lot of time to decide what to do, to analyze and so forth, and I'll get into more details on that in the subsequent videos. But what I decided to do, that we have so many newbies out there, so many people really need to learn. I'm going to take this slowly, and perhaps it'll be I know for your advanced option traders it's going to be way too slow, but I'm here to help the newbies, so bear with me. What I'm going to do is to break up this situation, this decision process, into 3 steps. So in video number 1 of 3, I'm going to call the setup. And what we're going to do is an overview of Trader Joe's IWM strategy. And this is a strategy that many of us do week after week, month after month, and that is selling puts. We call these cash secured puts because we have to have enough money in our brokerage account to cover the cost of those shares if and when they are put to us. A second video I'll be putting out probably tomorrow will be details regarding your suggestions and comments. As I mentioned, I went out to our subscribers and to our friends asking, what would you do in this situation? I wanted to get your thoughts and see what happened. In video 2, I'm going to briefly review your comments. We had probably about 100, that's right, about 100 comments. Some of the comments provided ideas, recommendations, thoughts, and so forth, and several of them also asked questions, a lot of questions. And that sort of turned the light bulb on that a lot of you out there listening, reading our posts need help. And you know, I started in 1983 studying technical analysis, and of course then it was a lot different than it is now. We didn't have all the resources that are currently available. Even though there's so much information available, the big question, and in working, mentoring my daughter, mentoring my wife, it's such a big universe of information. Where do you go? Where do you begin as a newbie? So if you are interested in that type of information, let me know and I will cover that in future videos, probably in the fall, either August or early September. build up a library of videos for you, especially for the newbies. And I'll do that after my vacation. We're going on vacation pretty soon, and I'm going to head back to South Carolina, to the Greenville area, to have a family reunion, and then after that back to St. Louis, where I grew up as a young kid. Sorry, I'm getting off subject. Video 3 of 3 will tell you what did I decide to do. What was my decision that I actually did yesterday prior to going to my appointment Friday morning? And more importantly, and I've been thinking about this, and I did an analysis already, but it's getting too late to put it up today. What did I do wrong? And I don't like to ask that question. I would prefer to say, what could I do better? And believe it or not, after doing my analysis on my decision on Friday, there are 4 or 5 things that impacted my judgment when I made that decision yesterday morning. And I'm going to share these with you because I believe it will help you understand a lot of what you're going to be faced with when you too are going through this type of a decision. Do you take your profits or do you let them ride? It's going to be a little difficult because it's hard to admit we could do things better, but I do that every day. I continue to learn every day, and until the day I die, I will continue to do that. So let me get off of my soapbox. So this is video 1 of 3, which is the setup. On Thursday, July the 5th, was a date to sell puts on the IWM, which is a ETF, iShares Russell 2000 ETF. I like to sell puts on Thursday or Friday, the week before the weeklies expire. So I look to sell puts on Thursday or Friday that expire the following week. So basically we're in the trade about 8 days. Which includes the weekend. So anyway, on July the 5th, I sold the $163 weekly puts and received a credit of 52 cents. That money is immediately put into your account. So for each put that you sell, you will receive approximately $52 credit into your account. So for instance, if you were to sell 10 puts on Thursday, you would have $520 less commission credited to your account. That's your money. When I was looking at this 163 put, 163 is the strike price, it's a weekly, and it is a put, the probability of being out of the money was 69%. I want it to be out of the money at expiration. Okay, so therefore I had a 69% probability of winning and a 31% probability of losing. And it's not really a loss because you get to keep the ETFs when they're put to you. But that's another subject. They expire on July the 13th. At that time, it had a delta of 20 cents. So for every dollar the underlying ETF moves, the put will move 20 cents. Okay? Now, when I was looking at this chart, as you notice, this is IWM. I have some of my special indicators here. I noticed this is the last 4 days, Friday, Thursday, Tuesday, and Monday. We were closed, if I remember, on Wednesday. Okay, we were in a nice uptrend, so I thought, yep, that's going to continue up. Why not sell some puts? So what I wanted to do is look to see where is overhead resistance. Overhead resistance is where I drew in this line, this red line of $170.20. Now, why is it important? If you listen to our videos on support and resistance, you will quickly learn that at a resistance point, in this case this red line, there's a possibility that price will reverse and head back down. Okay? Most of the time it will not automatically shoot through this resistance area unless there's like a news announcement, earnings, or something like that. Okay? So I thought we have clear sailing up to roughly $170. Now the question is, when you sell puts, there's a chance that you could have the ETF shares put to you at the end of the expiration period, which is next Friday. Now this would be okay if I had 100 shares of the ETF IWM put to me next Friday, because what would I do? I would go ahead and sell covered calls. And I'm just realizing that, wow, for you newbies, I am sure you're lost. I'm so sorry about that. It's just difficult to make it easy. But anyway, bear with me, hang with me, and we'll get into all of this in the August or September time frame. You know, if you come to our Facebook account, sign up as a friend, and that way we'll keep you informed of when we're going to do all that. But anyway, let's move on. So my goal is to have IWM close at a price above 163 on the 13th of July, so that the IWM shares are not put to me. That's my ultimate goal. What I want to do is keep this premium, this $52 credit for each put that I've sold. Okay, so that's the ultimate goal. If this happens, I will not have shares put to me, and I will retain the full profit of $52 less commissions per each option sold. Now, bad news, such as well, I don't want to get specific. Let's say someone puts out some comments about tariffs, or there's other bad news about Supreme Court justices and so forth, can turn this trade against me, and I could end up with 100 shares of IWM for each put that I sold. If this happens, as I mentioned above, I will then sell a covered call the following week. Okay? Now, let's get to the decision, the question that I was faced with, and why I sent out a request for inputs from subscribers and friends. The decision I was faced with yesterday on Friday, July the 6th, and that was in the morning. I think it was 10 minutes to 8. I'll show that in another video. The price on Friday morning had moved up over $1 since Thursday's close. The mark price of the 163 puts, because price had moved up, because price of the underlying ETF moved up, the price of the put went down. So the price of the puts that I had sold had gone down from 52 cents to 23 cents. Okay? The mark is the in-between price between the bid and the ask. So yesterday morning I had the opportunity to buy back my puts for 23 cents, which is 29 cents less, or 55% premium captured in only one day. In other words, I could have retained 55% of the premium that I captured in only one day. So that would be a $29 profit for each put I sold. If you sell 10 puts, that would be in one day you would reap $290 of profit less commissions. Okay. The problem is I am no longer a day trader. I did day trading from late 1998 to the first quarter of 2000. And that's another different world. So even though I'm not a day trader, do I capture my profit? Do I take my profits? Do I buy back my puts and say I'm going to forget about it and start all over next week? Or do I say, well, the price is moving up nicely, as you can see here. We have not yet hit the resistance area of 170, so there's a good chance, a high probability, we like to say, of price continuing up on Monday. Today's Saturday night. Okay? So I sent out my request to all of you on yesterday, late yesterday afternoon, about 4 o'clock California time, 7 o'clock Eastern time, asking, send in your suggestions and comments. Tell me what you would do. Would you go ahead and buy back these options, these puts, or would you hang on, let it ride until next week? I'm happy to say I've gotten probably close to 100 suggestions and comments, and I'm going to go into that in greater detail in my video number 2. And let me thank you for those of you who did submit suggestions and comments. Let me thank you for the time and, more importantly, the thought that you put into your responses. It made me aware that we have a lot of expert, knowledgeable users who are what I refer to as option gurus out there. And wouldn't it be wonderful if we could tap in to those people and share a strategy with all of us? It would be wonderful. But anyway, let me get off of my soapbox. I know it's Saturday evening. People want to go to bed. They're not thinking about stocks and so forth. So let's hang this up until tomorrow. Like I said, I'm going to try to do video 2 for the details regarding your suggestions and comments, and then a final video 3 sharing with you what did I do Friday morning, what was the decision regarding my actions, what did I learn from doing an analysis of my judgment during that time. I think you're going to find it very informative. It might be a little embarrassing for me because I've been in this business a long time, yet I learn every day, and I definitely learn from many of you who submitted such great suggestions and comments. So anyway, let's wrap it up. My golly, sorry. I tend to be long-winded. I just don't know where to stop, after 30 plus years trading and investing. It's just so much to share. But anyway, you have a wonderful weekend. Hopefully your Saturday was fun. You had a great time, and let's get together sometime tomorrow. I'll try to put up 2 more videos, and then we'll close out this subject. And of course, we'll see what am I going to do on Monday regarding my IWM puts. So you take care. Thanks again for visiting us at our website and also at our Facebook page at investorshelp.net. You take care. So long for now. Bye-bye.